Hello, chart watchers and Decision Point faithful. Welcome to this Monday, January 11th, 2021 Decision Point show. My name's Erin Swenlin, and I am from DecisionPoint.com. My father, Carl, is not joining us today, but we should see him next week. He is taking a break. So we'll go ahead and get started. We're going to start off. I'm going to talk, of course, about what's going on in the SPY right now. And I really wanted to point out the bullish bias that has returned, which is why we've taken a less bearish stance at Decision Point as far as the market goes. And I will talk a little bit more about that on that chart. Of course, everybody always asks me about gold and gold miners. That is the Decision Point thing, I believe. We had our free Decision Point trading room this morning, and gold, silver, and miners were definitely on that agenda. So I'll talk a little bit about all of those. I want to go through the sector rotation. We have a chart list that has all of the sectors in it, and we do what I call an under the hood inspection. We have all of these different indicators per sector on each of those charts. So I'm going to go through those, and then I'm going to finish off with my diamond of the week. I actually discovered it this morning, and I'm going to give Larry, who may be out there watching, the credit for that symbol request. Took a look at that chart amongst many others this morning, and I really liked it to the point that I decided to make it my diamond of the week. I think we're going to see some great movement out of this particular stock, but stay tuned. We'll talk about that in a little bit. All right, I'm going to skip the Decision Point scoreboards for now. We don't have any signal changes at this point. So I need to update the boards though, so I didn't want to confuse anybody. But the sector scoreboard is valid for sure. So as you can see, obviously lots of green. This is our intermediate term trend model. So this tells us that the 20-day EMA is above the 50-day EMA on all of these buy signals. The neutral is because the 20-day EMA dropped below the 50-day EMA, but we didn't go into a sell signal because it was still above the 200-day EMA. So we got that negative crossover, but the bias on the chart was still bullish because the 50-day EMA was above that 200. For the long-term trend model, we're only looking at 50 and 200-day EMA crossovers. So on the buy signals, those 50-day EMAs are above the 200s. And the one and only sell signal on XLE, we'll look at that a little more closely too to see how far away we are from changing that. But the 50-day EMA is below the 200-day EMA. And that is why we have a sell signal for XLE. But like I said, we're going to take a closer look at all of those sector charts. So let's go ahead and get started. I'm going to start off, of course, with the SPY, which is what I always look at. We start our Decision Point alert every day with the SPY chart. So let's get right to it. All right, I have a much better one that I already have annotated here. All right. So for a while there, we were looking at a rising wedge, which is a bearish chart formation, of course. And the more we saw this rally going in, moving up here in that steep manner, really quick rising trend, it looked like we were getting ready to have an exhaustion, but we saw that the indicators were starting to improve, and it just didn't, the rising wedge just didn't make sense anymore. So we have moved it into a rising trend channel, and we actually busted through the top of that rising trend channel. To me, is a sign of an exhaustion move, a possible exhaustion, because we're accelerating that rising trend, and accelerated rising trends are very hard to maintain. So sure enough, we busted out at the top of this rising trend channel, and now we are coming back within it. So my sense is when I look at these indicators, you have a PMO buy signal right now. You have confirmation, if you will, on the OBV because we have rising tops. I'm looking at some of these indicators that just came in. So I'm noticing that we never actually got to the top, the upper Bollinger Band for the VIX. So, you know, we do invert our VIX. So overbought is on the top. So we never saw readings that got near 20 on the volatility index. So we're seeing those fear readings increasing right now on the decline that we had today, which was a pretty hefty decline, more than 0.5%, about 2/3%. And so we did see the fear level increase somewhat. What bothers me is that we got up here, we didn't penetrate the top Bollinger Band, and now we're already heading back down. So not really a good picture for the market right now. I do see total volume has been pulling back a little bit though, and on a decline, we want to see lower volume, less participation, if you will. So at this point, my sense is we're going to end up with more consolidation sideways. I think worst case would be a trip down here to the rising trend that we already have established. I'll be writing more about this in the DecisionPoint alert tonight. But the PMO did see a little bit of deterioration because we are seeing it decelerate somewhat. But overall, I still am feeling pretty good about the market. It's just very short term. We're now starting to see this really quick, steep rising trend starting to fail. So there are quite a few areas of support. It may not have to go all the way down to test the bottom of this rising trend channel. The 20-day EMA is right there, and that could pose as pretty strong support. So at this point, I'm kind of expecting a more pause, sideways consolidation, possibly a move down to test that 20-day EMA. So I'm hoping to find some opportunities this week for Diamond subscribers, as well as my own portfolio. So keeping an eye on this pullback, I think it might offer us an opportunity to take advantage of this rising trend channel that we have right now. All right, so the bullish bias that I was talking about, and I went over this in the free trading room this morning as well. And you can see we test the bias, if you will. We judge what kind of bias the market has, really based a lot on the color on the chart. If we have a lot of green, that tells you that there's certainly a bullish bias. Well, when we were coming in here, we had the big gap up, and you can see that we were losing that bullish bias. We started going red on our short-term indicators, and we were already seeing a pullback on our intermediate term indicators. So that was telling us that that bullish bias was deteriorating. So we did end up getting that pullback, but then immediately went into this really nice rising trend. Well, of course, that has brought back that bullish bias. The one thing that I would caution about on these indicator charts right now is the fact that maybe it doesn't look overbought here, but typically we have seen this area right here be the stopping point for these indicators. This could be considered near-term overbought readings. Now, they certainly could go higher, but we're now in that position that while we do have quite a bullish bias here, we're going to probably start seeing these indicators get more overbought, and that would be also a signal that we're going to see a short-term pullback. All right. I have got plenty of time to talk right now. We're going to look at gold, and I'm going to put up GLD first. I will give full disclosure that I do own GLD. It's a long-term buy and hold, so it's not, so I'm feeling pretty bearish about gold right now, but I'm not selling that position. It is a buy and hold hedge position. So I have that in TLT bonds. So we can see though that we had this bearish rising wedge, and then we popped out above it, similar to what we saw on the SPY. But then we immediately, it was an island. We got the pullback, covered that downside gap, and then since then gapped down one more time. You can see that the 20 and 50-day EMA are now in decline. We will likely see a neutral signal come in on gold soon. And you can see that the PMO is just about ready to give us a sell signal here. RSI is negative. So not really what I would say is a buy point for gold right now. I think it is positive that it at least, didn't have a new intraday low today, but I'm watching this 200-day EMA. But let me go ahead and I'm going to put up dollar gold. And this one this is updated. So dollar gold, we see did have a nice rise. It did bring price above this area of what was support and now is resistance, but it's just popped right above that. and it has tested that 200-day EMA. Unfortunately, like I said, the indicators are still quite negative, and I think that gold is still vulnerable to another pullback, probably down to this area of support here at that low that we had at the end of November around Thanksgiving. All right, so let's look at the miners, and then I'm going to pull up SLV. All right, so this is a good introduction to the charts I'm going to get ready to show you for these sectors when we go over sector rotation. So I have the RSI, of course, we have price. This is a 1-year daily chart, bar chart. And then these are all of the indicators that we put in for all of our sectors. And in this case, we have it for GDX, because of course, everybody's following gold miners closely. And it's just one of those areas we like to cover. So we set up this chart to get all the indicators underneath. Now, my guess, you can tell these have not been updated yet. These are as of Friday. But you can see we were already losing a lot of participation on that big decline that we got on Friday. Currently, we did end up another 2% down, but we're holding the rising trend here, which is very interesting. We do have the 200-day EMA, and that is a support level in here. And you can see the 20 and 50-day EMAs are right in there bunched up. In fact, I'm going to go ahead and put that zoom thumbnail on. There we go. All right, so you can see the 200-day EMA and really even the 20 and 50. This has been kind of the sticking point for gold miners for a while here. You can see staying above that 200, but just barely. We are still holding on to this rising trend, like I said, in the short term. So we haven't actually seen the breakdown for miners. But I have to say, when I look at this chart and I see the RSI moving negative, we have a top on the PMO. It topped above the zero line, but just barely. There are a lot of problems here, and underneath the hood, these indicators, I'm sure we're going to start seeing some very oversold readings as far as the miners go. So the good news is that we are getting oversold here. And like I said, once we get the updated chart for today, that will of course be in the DP alert this evening with the updated chart. But my guess is we're going to see some even lower, more oversold readings here on GDX and their components. So when we get those oversold indicators, that's when we're going to start trying to time the move going back up for gold miners. But looking at the problems that we've got experiencing with gold and its breakdown, that's putting a lot of downside pressure on miners. And I don't think we're out of the woods with gold yet, which means I suspect we are going to lose this short-term rising trend on gold miners and likely come down and test at least that 3250 support area at the low back here from November. So at this point, I don't think this is really, the place to try and catch the bottom on miners. I think that we're not through working out this declining trend. And you can see that when we look at that declining trend tops line, the top of this declining trend channel, we're back within it. And again, price is being stuck right there at the 200-day EMA, short-term rising trend, as well as the top of this declining trend channel. So there is a lot going on here for miners. And looking at the indicators and the decline that we saw Friday on these indicators, and what we're going to see on those indicators when we get the final numbers, it's going to be in a very oversold position. However, I think that the downside is much more likely than the bounce to the move to the upside right now on miners. We'll be watching. We'll know a lot more this week when we see what price action does for us if we're going to lose that short-term rising trend. If we lose that rising trend channel and the 200-day EMA, then I would definitely hang on. I would be looking for a test of the bottom of this trend channel or possibly the bull market top and the lows back here from April, May, June. So that would be my area to watch for as a stopping point. But at this point, the rising trend is being held. I just don't think that it's going to continue to hold. I don't think that this is going to be that area for you to be able to take advantage of a pullback or a decline here on the miners. So not really a fan right now of the gold miners. I think there's still more downside potential here than upside. And once we start to see it get back here and then we get the improvement on the numbers, that's where we want to get back into miners and start riding it to the upside. But right now, I think there is still more downside to be had and a better entry, at least, into the miners than we have right now. All right, I'm going to look at silver. I don't have the same indicators for silver, and I'm going to look at SLV, which is the ETF for silver. Let's make it nice and big for us. And I'm going to put my inspect tool on, just so we can get a feel for support levels and resistance levels. So obviously this is the main support level. You can see after that breakaway gap, you've got a continuation gap, a runaway gap. And that really is forming the support level here for silver. And then of course, it's been in this trading channel right here. We got the breakout at the end of December and things were looking pretty good. I think I put it as a pick in diamonds back in here. We did still get some move to the upside on that breakout. But then of course we have the big failure and now it's not even holding the 50-day EMA. So unfortunately, I think silver is going to also be really feeling that gravity of gold and the metals in general. And we will probably see even a longer pullback than what we have here. I would expect to see it move down to that 2150 level to get back to the bottom of this previous trading channel, which it looks like price is ready to get back into and start trading back and forth with. You can see the PMO is just about on a sell signal here for SLV, and the scooter ranking has fallen out of the sky. And you can see that also we have a lot of volume coming in on this ETF to the downside. So we haven't quite hit capitulation level, I don't believe, on silver. I think we're still going to see a move probably back to that 2150 area, like I was saying. All right, so we looked at gold, we looked at silver. I'm going to go ahead and we're going to look at some of those sector charts. There we go. And I apologize for the white space, but that's how we have these set up. And this is how we put them in our reports when we do show the sector charts. So let's go through. So this is COM. You know, at the end of every, in fact, let's go ahead and do this. At the end of every week for Diamond subscribers, I like to go and do a purview, if you will, of all of these sectors. I like to put them on one page. I'll make them a little bit easier to see here. I like to put them on one page and then get a feel for which ones look like they're going to outperform the following week. And the way I do that is, of course, I check out what the PMO is doing, but I also look at the price action, try and determine all of the different setups. Now I'm looking at this XLE chart, and remember, it was the only long-term sell signal that was there. And as you can see, we are losing that sell signal right now, right today. So I will be updating that sector scoreboard, and likely I'll be writing a bit more about energy and what we're looking at going forward here. It still looks good. Obviously, we have a PMO buy signal going on here. The only issue we have right now are these very overbought indicators underneath the surface. And again, we don't have up-to-date numbers here on the stocks above their 20 and 50-day EMAs, but you can see what the readings were on Friday. And with today getting another 1.5% increase, these are only going to get more overbought. So the question is, are we too overbought to keep moving forward and rallying? Well, I would have to say, I would point you back here to November and into December. And you can see that these indicators were able to stay very, very overbought for a very long time. What are we talking about here? How many periods? At least, where's my little thing to tell me what that is? Let's go ahead and try this again where I can get all of it. Okay. So yeah, we're looking at, sorry, I want to get this measurement in because it's important. Okay, so we have 24 periods. That means 24 trading days where XLE was having very highly overbought readings. So this can persist. So even though we are going to see even more overbought readings today, by the end of today on XLE, we know that those readings can persist. And when I look at the price action today, I'm going to put this right here on the overhead resistance. And you can see that once again, we did pop above it, but this time we actually closed above that area of overhead resistance. The RSI is getting overbought, but again, overbought conditions can persist. Seeing this long-term trend model buy signal, I think, is very positive for energy. We might be looking at more rally moving forward on energy. And just since you're watching this program, I'm going to throw, let's see, I wanted to throw IEO at you because this is mimicking that chart, the XLE chart, by quite a bit. And you can see that we popped above that area of overhead resistance. We're now trading and staying above it. Of course, the only issue for IEO is going to be this overhead resistance that's going to arrive at about $41.85, $42 right in there. So we do have a little bit of concern here with that overhead resistance. It's about 3.3% away from where we're at now. And again, overbought RSI, so we have to be careful. And again, this is IEO. And then the other one that I've been watching is IEZ. And I like the look of this one even better, and I'll tell you why. This time we do have an overbought RSI for sure, but we already have that 5,200 positive crossover. And notice this is the overhead resistance from back in June, not up here like it was on IEO. So we've already come and burst above that area of resistance. Then we came in and we popped up above this area of resistance. And now with this pullback, somewhat of a pullback intraday, we still finished the day up. We came back intraday, tested that area of now support, and it sure looks like we're getting ready to experience more upside here for the oil equipment and services ETF. So IEO and IEZ, I like both of those. I think that they're possibilities for areas to explore in the energy sector space. All right, but let's get back to where we were and view all of these sectors on one page. So I'm going to give you my candle glance discussion, and then we'll look at a flip through a couple of these. All right, so candle glance discussion. First off, looking at PMOs, staples, not somewhere you want to be, obviously. Comm services, the momentum has really been moving lower. Granted, we haven't lost much in the way of price on XLC, but it certainly doesn't look like it's ready to break out at this point. And when I look at the others, here's the other one, real estate. So these staples, real estate, those two are defensive sectors of the market, and they're starting to, they're continuing to underperform right now, which tells us that bullish bias is definitely in force when you see defensive sectors not performing as well. Now, utilities is definitely the exception to this, is it not? This is a very defensive sector, but we just got a buy signal coming through on XLU. It's just held support here at that 200-day EMA. So I think utilities still have a shot here. And there's XLU. And you can see the improvement starting to appear on XLU. We don't have anything more than the breakout here above those tops, and it is holding at the 200. So while the PMO has started to improve, I have to say utilities are still looking kind of blah. I think there's definitely more, there are other areas and other sectors of the market that I think we would do better. We would be better served investing around. Okay, so let's continue our little pathway here. Healthcare is one that has really taken off, and I know a lot of that has to do with the virus and the vaccines coming out. And XLI is an area we've been watching because you can see it's now gotten above the 20-day EMA and above that area of overhead resistance. It looks like it's struggling with it, but the PMO is starting to tell us that something good might be happening under the surface. And when we look at what's going on under the surface, certainly plenty of participation, but again, overbought conditions could be the undoing of XLI and its ability to continue higher. So let's go ahead and we're going to look quickly at XLH. And then I'm going to get into my diamond of the week, XLV. I'm sorry, there is not an XLH. All right, so this is the healthcare sector, and you can see really nice breakout last week from overhead resistance, and it is continuing higher. I like this area of the market. It is on the overbought side. So you'll have to be selective, I would say, when you start looking at this sector that you might want to invest in. And that brings me to the diamond of the week. And this, like I said, I found this one. Thank you, Larry, from my free trading room this morning. It was a symbol request. It had been one that has been on my diamond scans previously. And I had the choice of Gilead or Pfizer for diamonds, and I opted to go Gilead, which I think I'll show you that chart. I don't think is a bad move, but Pfizer for the healthcare sector in the pharma area, I think Pfizer is really lined up nicely right now. You have this rounded bottom right here on price. We've gotten it to come up here above the 20-day EMA. This is the first time it has closed above the 20-day EMA since we lost that support back here in early December, mid-December. So I think that that is telling us something good is going on. We're also seeing that PMO starting to turn, and the RSI has just moved positive. So this is everything that I look for on a chart. And you can even see in the thumbnail that we have declining bottoms right here that are leading into this rally. And on the OBV, they're mostly flat. So that's telling you, that's a good sign. That's close to being a positive divergence. If they were actually rising, that would be a positive divergence. This is just telling you that there's something good as far as volume going on when you have those flat bottoms to these declining bottoms on price. So really nice setup here. Pfizer, I think, is looking pretty good. Now, the other one that I ended up presenting last week to my diamond subscribers was Gilead. And I presented this one, I think it was on Tuesday. So let's see, Friday, Thursday, Wednesday. So Tuesday, I believe I did get it right there when it had popped above that 50-day EMA. And I really liked the setup here. We had the PMO buy signal that had just come in and a positive RSI. So since that diamond's recommendation, certainly we've gotten a pretty nice move off of that. The only issue for me right now is that it's hit that 200-day EMA today and it's pulled way back. So I have to say I like Pfizer better right now than I do Gilead, but I think Gilead has a lot of upside potential as well. So if you're interested in that biotech area, I think that might be of interest. But as I said, for our diamond of the week, I am going to call Pfizer PFE as the diamond of the week. And I think that we'll see some pretty good action here. I'm going to add this probably on Tuesday to my spreadsheet for diamonds because I do like it. It might make its way into my own portfolio too, but we will see about that. Really enjoyed the DecisionPoint show with you today. Sorry Carl wasn't able to be with us, but he will join us next week. Have a great rest of your week and happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.